Hello, everybody. Busy morning. Hugo, how are you? ECB, GDP, XYZ. How's everyone doing today? Give me Y if you could hear me. Everyone doing all right? What energy crisis? Hi, Jays. Okay. So I've been working the short side of crude for a few weeks. We're actually under the 2-week off number. It's 82.40 right here. Hello, how are you, Kaustub? Nice to meet you. And just another comp. Oh, good one, John. Something else that we talked about last week and didn't have a lot of company when I talked about that this, the 10-year yield could end up being some type of failing rally. People were calling it a breakout. It's going to be important for it to hold 145. But I think the key action right here is in the energy market. So unless they can reverse it here, I'm looking for these speed lines to be taken out. So yen, wish it would get, take care of business as long as it's under pressure. The metals, I think, will do okay. Looks like we're going to try and take this high out in gold. Silver's not acting as good the last week or so. And just one thing I wanted to call your attention to, I think we're vulnerable to a sell-off in stock indexes. Maybe not the end of the move, but a sell-off maybe into the Fed. The NASDAQ here looks like we're setting up a 3 drive.
Oh, yeah, baby.
Yeah, 3 drive. You sound like, who did that? Wolfman? Anyway.
Oh, no, baby.
You're good, man.
Hello, everybody.
Right. Hey.
Hey.
So, watch this if it makes a new high in NASDAQ. And S&Ps have been lagging. Look at NASDAQ. And that's because of yields. So with yields coming down, they move into the mega caps. And when they're heading up, they move into the cyclicals. And that's not happening. Okay, so, and the banks don't like lower. I don't see any reason to be bearish gold yet until the yen gathers itself for a move to new highs. So that's what I think, Jay. And was that you, Stel, or Ryan, or I heard Blake's making the sound effects. So it sounds like we have a radio show.
Oh, yeah, baby.
Man,
I was so excited about you talking about bearish reversals in equities. And I'm like kind of excited about that. I mean,
don't you think they're kind of acting a little sloppy, the S&Ps compared,
I do. I actually do. Well, yesterday, if you didn't notice over the last couple of days, I mean, we had like a, you could say an evening star formation, gravestone doji a couple of days ago. S&P's like, look at the daily chart, S&P's
this one.
We're sitting right on the and if you look more of the continuous contract, but doesn't really matter. What we're looking at is a move below 45.50, and we might get a little bit of a pullback and a little false breakout. I think the end of the week's going to be pretty important. We close below there by the end of the week. Might not be so pretty, but I don't want to interject just yet. I'm gonna let you talk to Stelios and Ryan, but oh yeah, Dale, I like it. All right. You guys,
I'm telling you, you have found your vocation. You're a host. Besides a trader, you're a Renaissance man. You have a lot of talents, Blake. So we'll see what happens with oil. What do you think, sell. I think the news was in oil yesterday that Iran's going to let us into the talks again. You know, I don't see how that's negative, but maybe it is. So with oil, you know, down about $4 this week from the high, it's kind of a lousy week. I'm bullish long term. I just am not in the $100 camp by the end of the year. Maybe sometime next year. And you know, corrections are healthy, aren't they? And you know, we've had a tremendous move in crude with, you know, unrelenting move. So I mean, even if it pulled back to, you know, $72 or so, it would just be a normal, maybe halfway back or 38% back, and then we all feel secure. There's no energy crisis, and then we start heading up again. So you know, maybe we'll have some warm weather in November. Okay, and you know, that's are you there still?
Yeah, I am here. Yeah.
Okay. What do you think of oil?
Uh,
I know you were bullish ever since I've known you, and you know you
mhm.
finally had your year. Um, what do you think? Can we pull back here? I know. Do you accumulate oil-related assets as well as precious metal-related assets?
Not really. I was long Norway, which is kind of a proxy, but
Okay.
um, but yeah, I agree. You know, a correction is healthy and it's expected. The question is, why did oil post this amazing run? And you know, one of the main reasons is the supply chain issues. And you know,
Yeah.
I've said this so many times. I have a couple of friends who are ship owners, and they keep telling me the same thing. You know, it's they have tankers and ships that are waiting in line to unload at ports, and still the supply chain is very broken. So as long
Yeah.
as that persists, I don't think we're going to see any meaningful corrections. And by meaningful, I mean going back to, you know, 50, $60.
Yeah.
So at the moment, I'm with you. I think any dips are probably good buying opportunities. Like that previous high around 76
Yeah.
would be a very nice point, I think.
Yeah.
And
70, I'd back up the truck.
yeah, I mean, in the short term, yes.
Yeah.
Obviously, if things change and if the whole situation gets, you know, it improves and we see things flowing again, then obviously we're in different. It's a different game. And I've said this before. You know, at these levels, the oil-producing countries, they're not stupid. They, you know, they see $80 oil. They want to secure their product for as long as they can. So there's going to be hedging, and there's going to be forces that cause oil to kind of stall in its rally. But as I said before, I think if the situation persists with the supply chain, dips are going to get bought. End of story. That's what I think. I don't personally, I rarely trade oil, but I like I said before, I trade proxies, and oil is just way too volatile, even on a daily basis, for my liking. But
Okay.
and natural gas is also flying. I don't know what it's doing today, but it's had a
Yeah,
few
I
monstrous
just
weeks.
showed it.
Oh, you did? Okay.
It's challenging the highs. Here it is. You know, right there. Okay, so we had this little ABC pullback.
Yeah.
I sound like Grega. And only I'm dangerous. Okay, he knows what he's doing. So you know, we're right up here.
Yeah.
You know, look, I mean, natural gas actually, I think, becomes the outperformer until there's hardly any left, and then I guess they have to switch, and that's what they're talking about. They're already doing it in Europe, I think. Are you?
Yep.
But what do you burn
We
for heat over there?
we used to burn oil until a year ago, and we switched to natural gas, and naturally it
Yeah,
becomes a lot more expensive now than oil.
yeah.
But no, that's what I think the majority of people are switching to. And
How often do they come and fill it up? That it, in the mainly use it for heating, right? Not for air conditioning.
natural gas, you mean?
Yeah.
Well, that's a constant supply, right? It's like a tap.
Oh,
So it's,
okay.
yeah, you're hooked to a mains, and you just take as much as you need.
All right. Okay.
But we used to fill up the oil tank, big oil tank, once a year, basically. But
Right.
People
Okay.
are asking about silver, and that's something that I've been looking at. People know that. I still think we might get another push lower, but I'm very bullish. As I've said before, I'm going to be buying either lower or on a breakout. I'm already long silver and miners. It's my biggest position by far, and I do think we might get another dip towards the 22s. It's very probable. It will depend on the Fed. It will depend on a lot of things, and next
Yeah.
week is going to give us a lot of clues, I think. But in the medium term, man, I'm so bullish it hurts.
Yeah, you know, I'm
Oh, it's gonna hurt.
Yeah.
Oh,
You know,
oh,
if
don't worry,
K-Man's
don't
right,
you worry, it's gonna hurt. So
and if K-Man's right about another high coming in the end, I think that the metals are still somewhat linked. And if we could see 116.50 in US dollar yen, that's where I want to see where the metals are at, should that occur. So,
you know, I hate to interject here, but we do have the ECB press conference coming up in about 20 minutes, and we also have GDP numbers coming out. Stelios, I wanted to get your opinion on the ECB. You know, I've got mine, and obviously Ryan's going to be here very shortly. I just wanted to get your opinion because I know you're actually away from your desk right now. But what are your thoughts on the ECB going into today?
Well, they didn't give us anything, right, on the rate decision, and so it's going to be about the pressure. I find it difficult for them to deviate from what they've been telling us over the past few meetings. Yes, inflation is higher, it's going higher, but I think they're probably going to play it on the safe side and stick with the whole transitory approach. And that's what I think. I don't think we're going to get any fireworks. On the other hand, we have got the Bank of Canada, which is clearly quite hawkish. We've got the Fed coming up, who, they might also tilt that way. So there is a risk, but I think, unfortunately, I don't think we're going to get anything meaningfully different than what we've been getting in the last meeting, let's say. I don't know what you guys think, but I don't expect anything major in the pressure.
will pigs fly, Blake?
Pigs might fly. You know, I'm going to hear Ryan's opinion here in just a second. I'm going to take over the screen. You know, and I have to. I'm sorry, I don't mean to do this to you guys, but I do have to shift gears a little bit because I'll come right back to the ECB. I want to hear what Ryan has to say, but I want to go back to crude. You'd mentioned crude oil. Crude, actually, if you didn't see it, we pivoted off a really, really important support once again today, and this is something that I'm watching really carefully. Gosh, where's my crude? Let me find it. Let me find it for you guys really quick.
Can you hear me, by the way, guys?
Yes,
we can.
Cool.
Finally, yeah. Where you been, man?
I had my mic in the wrong plug. Story of my life.
Well, you know, that's what she said.
Hole. Yeah.
So here's the channel support right here in crude. This is 81. Roughly 81. You can see it's 81.50 actually is where I have it marked up, but 81 is actually the lows right here.
Yeah.
And that's channel support. And this is, I was actually talking to Chris Weston of Pepperstone about this last night. Just less than 12 hours ago. We were talking about, hey, if we break here, we're going to 78. This is going to be a big breakout point. This is, the big breakout point would be right there. In this nice little uptrend, and one of the points that I was making last night, and I'm going to tell you guys, I haven't met anybody that's bearish crude. There's crude bears are non-existent anymore, and that's it's a problem from a positioning standpoint. So I wouldn't be surprised if we just have a little bit of a setback. I don't think crude's going to 50, but I would not be surprised if we trade back into the mid 70s first. And so I think that's the risk right now. And, if you take that into account, you also look at the dollar Canadian, we're sitting mid-range between the 123, 124.25 range, which is the range we were at ahead of the Bank of Canada yesterday. And then you saw the Bank of Canada yesterday. It's very surprising that we're not trading down below the support. So, if crude breaks down, dollar Canadian could have a nice little bounce. Norway as well. Just some things to think about in regards to crude. But let's go back over to the euro. Let's talk about the ECB. Let's talk about, like, Ryan, you know, I hope everybody got an opportunity to hear your video that we made on the Trader Summit site a couple of days ago. But I want to ask you really quick, any updated views going into the ECB today?
Yeah, mate, you know, we weren't expecting much from the initial announcement, and there was nothing in the statement that triggered anything. It's really going to be down to the press and whether Lagarde does drop any hints about what they're going to do with the PEP and how much they're potentially going to roll over into the APP. That's going to be the ECB's version of taper talk.
And this is why it's going to be really important to be listening to the press conference. Not, you know, you got the presser once it starts, the ECB's statement, and you know it's really going to be more the Q&A that will give us an idea, or do you think she's going to say it in the actual statement?
I doubt she'll say it in the opening statement, because it's not in the statement that got released. But you never know. But it is going to be in the Q&A. So as long as someone asks the right question, and she does take her time answering these questions, as we know, you know, she can take 10 minutes to answer one question. Maybe the most we'll get is a hint towards the December meeting, or nothing at all. I mean, if it's nothing at all, then the market's going to go away and, okay, same old dovish ECB. So we are being a bit hopeful that we get something more than expecting something. That's the best way to look at it. But that's what we've got to watch for. You know, that's the risk. If she does drop something, no one's ready for it. And if it's something that's mildly hawkish, euro's going to fly.
Well, I mean, you look at Brazil and look at their central bank yesterday. They raised rates by how much? 1.5%.
Yeah, 150 pips. Yeah.
Yeah, I mean that's a big move. I mean, you know, are all these other central banks kind of making a policy error right now as they tighten? But you got the ECB, you got the Bank of Japan. We heard last night. They're the big, you know, the top G7 of the top. Well, let's just say the top 3 central banks. They're not doing anything. I mean, the Fed may be, cutting back on we'll start tapering, but we're not raising rates until the end of 2022, you know, a year from now. So, and the ECB, you know, I don't think pigs are going to fly today, Dale. So, I mean, you got the BOJ, the ECB, the FOMC, you know, we're not raising rates. So are these other central banks making a mistake by tightening too early? What do you think?
No, it's all part and parcel of what happens when central banks start shifting. You know, you've got the, you know, emerging market currencies, all these smaller countries, and they tend to move faster and in bigger steps than everyone else. You know, think of it like a volatility basis. You know, there's much higher volatility. I mean, you know, they're cutting rates, you know, what was it, from 9% or whatever it was? Sorry, hiking rates, you know, 7.5%. Look at Turkey, rates at, you know, 15, 16%. You know, when they move big. But in the context, it's not really big. But it's also to do with sort of front running what the major central banks are going to do and what the global economy is going to do. You know, if inflation is going to be hitting, you know, 4, 5, 6% here, it's going to be hitting 7, 8, 9s, 10s in emerging market currencies and countries.
Yeah.
So that's what they're playing with. It's a different level, but it's going to move the same way. It's just far more volatile at a much different level to what we're used to here.
Yeah. Okay. Well, hey, you know, just looking at the euro dollar, these are, and thanks for your thoughts, by the way. And same with you, Stel. Let's, you know, here's the euro dollar, and this is really what I'm looking at. And
you don't like my thoughts anymore, do you, man?
Yeah, I do, Dale. I love thoughts.
I'm just checking.
No, but you know, as far as the ECB goes, I'd take a European over a Californian any day. So, you know, thoughts wise.
Hey,
so,
I'm a Chicagoan, man.
You are a Chicagoan transformed into a Californian. But let's but looking at the euro dollar, we're really, you know, key support. 115.80 is a number that I've been throwing around like literally since last week. This is the 618 retracement. We also have a spike low down here at 115.70. So this is a support zone. You know, it's not an exact science. So you can see we're getting right near, you know, support. And then obviously resistance comes in at 116.25. That's like a spike high that's been happening. I was hoping earlier this week, you know, people were at, because I covered my euro dollar short from last week up here in the 116.50s. I covered it, you know, or I was actually short at like 39 or whatever. Anyway, I covered it at 115.92 earlier this week, but we've been just in a really tight range. I've been hoping for a move back up to the 116.40-50 range to be a seller, but we might actually get that today. And the reason why I say that is because, you know, I think everybody has an expectation of the ECB being dovish, right? I mean, that's the general consensus. I mean, Euro's, you know, never going to rally again. It's, you know, that's,
therefore the surprise.
Pigs are going to fly before they, you know, right. Everybody thinks that ECB is going to be dovish. They might act and act like the biggest, most dovish central bank out there. But remember, in the central bank world, words are almost, if not more powerful than actions. So rhetoric is extremely important. So, you know,
Pearl.
That's
a pearl.
Well, I think it's, you know, it's you look at the Fed, it's their most valuable tool. It's how they word things, how they craft things,
isn't it?
It is. And so you got to take that into account. And I wouldn't be surprised if the ECB, which is expected to be extremely dovish, just isn't as dovish as the market expects. And, you know, that's why we're going to have to listen to her words. And as Ryan pointed out, we're going to have to look at, you know, how she rearranges the her checkerboard with PEP and any other acronym type of programs that they have going on. But if the market is not satisfied about a dovish enough central bank, we have to watch it on a couple fronts. You know, the S&P as you know, could S&P and, you know, broad markets in general. And I want to talk about the S&P because, Dale, I wanted you to see this. That's an evening star formation that you see on the S&P, right? That's big white candle followed by a doji, or a long upper shadow doji, by the way, and then by a bearish candle. That's an evening star formation. I know we're up right now. I can clearly see that the markets are holding up right now, but there's a lot of time left in the day. So, you know, you get a central bank that maybe is not quite as dovish. People start really believing, holy cow, you know, maybe we are going to see a global tightening phenomenon. Maybe the euro does get a little bit of a lift here, but, you know, the euro I don't think is going very far. You know, we might get back above, you know, 116, maybe towards 116.50. That would mean the dollar may weaken, but I don't, and this is what I told the traders in our chat room, I don't think all dollars are created equal today. You know, you could see the dollar weaken against the euro, but strengthen against the sterling as it is right now, and strengthen against the Aussie and the Kiwi. Yeah, so you could see, and that's when you have to start looking at, you know, one of my favorite plays and setups right now is the Euro Aussie. This is my chart of the day yesterday. Head and shoulder completion, right? 261% extension of the last bounce. I mean, you think about this, and there has been so many people in our chat room, like K-Man that you heard from yesterday, Ryan, a lot of people very bearish on the breakdown below the 159 level. It's been like nonstop.
They did well.
Oh, I mean, it's been like straight down for the last 3 weeks. And so now we've finally completed that pattern, and, you know, relative strength is divergent. We're at an 88% retracement of this entire range. You know, obviously oversold, completion, you know, you name it, you know, we're there. So now all we have to do is squeeze back above 155, and we're going to probably see the 200-day moving average again, which doesn't mean, you know, the Euro Aussie is going back to 170. It just means that we might squeeze back to 156.50, 157. which is, 150 to 250 pips away from where we're currently at. And that's a big move, So I think you have to keep an eye on the Euro Aussie, especially if you have a central bank that's just not quite as dovish as the market expects. So that's just something that I wanted to talk about today. So Ryan, we got about 5 minutes. Stelios, Dale, any other comments? I know we have GDP coming out too. Any other things that we should discuss ahead of these?
Just a quick one on the euro.
Yeah.
We've seen all week there's been some big option expiries, 1600 to 15.
Yep.
And these have been keeping the price pretty much locked to the area, which can be unusual. And I think it's happened because it's been a perfect storm where the market's sitting on its hands a bit this week, waiting for the ECB and his other central banks. So we're seeing the option effect happen. Though today's expiries at 3 o'clock are the last of this big lot that we've seen all week.
I'm giving you guys a little glimpse of some stuff that's in the Forex Analytix platform.
I think there's 900 odd at 1590 tomorrow, but these 1600, 1615s have been particular. I've been keeping an eye on them. When they come out at the expo today, I think that's when we potentially could see a possible move in the euro, depending on what the ECB has said or not said. So I'll be looking for maybe an initial move when she's finished, depending on what she said about 230 to 240. Then perhaps we might still sit a little bit around this 1600 area if we're still there into the expiry. After that, if she said something that's worth the euro moving, I think that'll be the time when it moves, and that's the time to look at. Just quickly again on talking Aussie dollar, a few people in the market this morning making a flat because the RBA didn't buy their April 2024 bonds.
Can you explain
today
to traders what that means? And this is something that you guys were talking about in Europe when I opened my eyes this morning, jumped in the chat room. All the talk was about the RBA. So
I'll do the 30-second version because we've got the data coming up.
Yeah.
The RBA are basically in yield curve control. They're using the April 2024 bonds to do so. They purchase weekly. They didn't buy any yesterday or today, and the market's gone in a bit of flap of that. Bond yields have shot up on those, but the warning I've got is that they can still buy them tomorrow. So keep your ears open in case they step in, which will be tonight for us, tomorrow for them, and make those purchases, because there's a lot of inferences going on that they've abandoned the yield curve control. I don't think they've done that on one move.
Awesome. Okay. Well, I know you have to get into our chat rooms, and by the way, Ryan, K-Man,
I'll say
Amanda,
for now.
And I'm gonna be see you, Ryan. Thanks for your thoughts. I'm gonna be jumping in the chat room here because I want to be there for the ECB presser. We do not have a guest today. Our guest bailed, so that happens, right, Dale? From time to time. Yeah. So I want to be here to cover the GDP. The GDP numbers that are with you. If you guys are Forex Analytics subscribers, there's a little, over here on the calendar. If you just move over to these tools in the upper right hand corner of the screen, we have Data Flash. You can click on that. You guys know I used to run Data Flash next to Bloomberg, and it sometimes outpaces Bloomberg on data releases. It's really nice to have. It's a nice little feature.
You save $2,000 too.
Yeah, well, 2,800, I think is what I was being charged every month. Yeah, anyway,
for a millisecond.
Yeah, and the funny thing is, of course, there's so much more to use in Bloomberg. I am one of those people that really underutilize that program. You take somebody like Stelios, who's probably a Bloomberg whiz kid, huh, Stel?
I knew what I needed to know. I mean, Bloomberg is complicated.
Isn't it complicated? It's like the most complicated. I remember when I first got a hold of Bloomberg back in 2000, I think is when I first had Bloomberg for the very first time. And it took a long time. Anyway,
well, it's a Jewish monitor, man.
You'll have to explain that to me after the data release. So we have here's GDP numbers are going to be coming out. We have let's see how much time we got, in about 30 seconds. Anything else I want to talk about really quick before the data comes out? Actually, I'm quite surprised that that Bitcoin caught a bid below 60K. I was actually surprised that we're back at 61,000. That's neither here nor there. I'm just kind of watching it, not trading it. Actually, I'm hoping for a dip down to 50,000 to buy it. That's what I'm hoping for. It's just seems like it's never going to happen.
Okay, here we go.
Yep.
Let's see.
And
Any second now.
I want the new vitamins you're taking, buddy.
Are you just looks like
your energy levels.
No, you know, it's just I got this new coffee creamer.
Metal sold off, so basically it might be positive because metals is selling off.
GDP numbers just came out. Actually, Ryan just reported them. I don't know why Data Flash isn't releasing.
2% versus 2.7% expected.
All right. Well, here, let me check it one other place.
Because weren't people talking about 0.5?
Well, consensus was 2.7. Who was it who was saying 0.5? I don't remember.
I think.
Yeah, here he goes. You know, on our calendar inside the app here, you know, 2%. Oh, a little weaker. So euro's getting a little bit of a lift. Dollar's not really doing a whole lot. You got the dollar yen actually weakening just a hair, but you can see this little, little triangle. This is a head and shoulder pattern. By the way, this is one of those trades I'm really hoping happens. Is I'm really hoping that the dollar yen breaks down towards 112. I'd love to be a buyer here at 112.
Yeah.
I'm just hoping this plays out so I can be long dollar yen. Just FYI. Dollar Canadian's getting a little bit of a lift, and it's like very mixed. Well, we're gonna have to just wait until we have the ECB. We have the ECB press conference starting. I'm gonna have to jump in the chat room and see you guys there. So, Stel, thanks for being here. Coach, thanks for always being Coach, being awesome as you are. And next time, I want to hear your thoughts, Dale. Anytime.
I'm gonna have nightmares now, bro. Anyway,
did you just get grossed out? You should.
No, I just, it's a new experience.
Thanks, Dale.
Everyone, join everyone. You know what? Subscribe and be there for this. Okay, I think there's going to be. I'm telling you, I am blown away by how upgraded the analysis is nowadays. I mean, I learn every day, and I've been at this for a long time. So, and can you imagine this is only like a half an hour of knowledge you're getting every day? If you immerse yourself in the chat room with these guys, I'm telling you, you're going to learn a lot. Okay, so that's my admonition going into the ECB. Sign up and get into the chat room with these guys. And remember, don't just count your pips, count your blessings. I have Danny with us tomorrow. So, former BOE official, Danny Blanchflower, is going to be talking about the upcoming recession he sees. So
that's it's really cool to hear Danny Blanchflower. For those of you that were not, Bank of England watchers back in, I guess it was about the Still 2000
late 2000s.
Yeah 2000. I was gonna say, well, did you say late?
I
like
think
2005 to 2008 or something like that.
I mean, he was the only one saying that they needed to cut dramatically going into the Great Recession.
Yeah,
he was the only one. So,
well,
it was a good guess by Danny Blanchflower.
All right, guys. Hey, I'm gonna jump into the chat room. So, thanks everybody for joining us today.
Yeah, take it easy, everyone.
Thanks.
Adios. See you guys.